Okay, now we're going to look at a segmented income statement. We're going to talk about, having more than one product line and how to create a segmented income statement. And eventually we get to the point where we say, okay, do we want to continue to sell these multiple products, or do I want to sell, do I want to narrow it down and sell less products? Okay, so we've got this example here for Gorman Industries. So Nurseries. Gorman Nurseries Incorporated grows poinsettias and fruit trees in a greenhouse nursery operation. The following information was provided for the coming year. We have the poinsettias and the fruit trees. We've got their sales, their variable cost of goods sold, and their direct fixed overhead. Now, it is important to make the distinction between direct fixed overhead and common fixed overhead. And the reason is because direct fixed overhead by its very definition will be a relevant cost when I'm making decisions, because direct fixed overhead means that it generally would go away if I do get rid of that product line. Whereas common fixed overhead generally by definition would not. So it would stay there even if I do, continue to make that product line or not. So, but all this question is asking for us to make is a segmented income statement. So my segmented income statement, I'm going to make columns for each segment. So a column for poinsettias and a column for fruit trees. And like any other income statement, the first thing that it starts with is my revenues or my sales. So I'm going to start with sales. And I'm going to start with my sales here. Poinsettias was 970,000 and fruit trees was 3.1 million. I'm also going to do a totals column because this is where I'm going to end up taking out my common fixed expenses when I have them. Okay, so my total sales is $4 million. And then I'm going to take out my less variable expenses. And so my variable expenses, I have variable cost of goods sold. And then it also says here that I've got a sales commission of 4% is paid for each sale of the two product lines. Direct, fixed, and selling administrative expenses were estimated to be 146 for the poinsettia line and 87,000 for the fruit tree line. Common fixed overhead was estimated to be $800,000, and common, not direct, would be $450,000. So those would be not relevant costs, but in this case, I am just making an income statement. So I'm going to put all those on here. So I got my variable cost of goods sold, and I'm also going to have my variable selling expense. So variable cost of goods sold is given, 460, and 1630. My variable selling expense says it's 4% of sales, so all I got to do is take the sales times 0.04, which will give me my selling expense for each one. So now I can find my contribution margin. Contribution margin is going to be sales minus my two variable expenses. So 970 minus both 460 and 338.8. And same thing over here, it's going to be the 3.1 million minus 1.6 and 1.6 million and 124,000 to get my contribution margin. Now I can take out my direct fixed expenses, which include my direct fixed overhead, as well as my direct selling and administrative expense. So my direct fixed overhead is given here, 160 for poinsettias and 200,000 for the fruit trees. My direct selling and administrative is shown in the body of the problem. We got 146,000 for the poinsettia line and 87,000 for the fruit tree line. So 146,000 and 87,000. Okay. So now I can find my segment margin. So My segment margin is giving me a contribution margin minus my fixed costs. So 165.2 for the poinsettias and 1,059,000 for the fruit trees. Now I want to find, this is really all of it for just the direct costs for the poinsettias and the fruits, but we do want to have an overall statement. So I'm going to also take out my common fixed expenses. Now these would not be relevant for making a decision about dropping one of these lines. You know, if we thought about not doing poinsettias or not doing fruit trees. But if I'm making an overall financial statement, I still need to include these if that's what I'm doing. If I'm making a relevancy decision, then it's different. So my common fixed overhead and my common selling and admin expense. And I'm just going to put the totals over here on this line because they're going to be subtracted only from the total anyways, 800,000 and 450,000. There's really no reason to separate it out because they are common fixed expenses. So now I can find my operating income, which is going to be my total segment margin minus both my common fixed expenses. It actually comes out to $25,000, $25,800 worth of a loss. So really this is operating loss, not income. So that's my segment. That's a segmented income statement for my two segments of poinsettias and fruit trees. And then, like I said, my totals column, this would be kind of what an overall financial statement would look like. But do notice that I make sure and separate out my common versus my direct costs for each one. And that'll be beneficial when we get to the point of actually looking at whether we want to drop, keep or drop given lines within our organization.